And now we're recording this on June 18th. I'm going to be talking about how to trade in bear markets. And my name is Sergey Savastyuk. I have a PhD in applied mathematics. I used to teach at Santa Clara University, and then I started a few companies. Tickeron now is one of my companies I'm leading, developing artificial intelligence, neural networks. NLG stands for natural language generation technology. And that's all we do here. What is the difference between Tickeron and other companies? First of all, we are a Security and Exchange Commission registered company. That's a matter of our disclaimer. And that's different than you could have heard somewhere else, because if the company is SEC registered, then this company cannot sell you any BS, simply say. If you find a company which is not registered with SEC, FINRA, then that's what might happen. As you can see, this is Online Trading Academy being sued by Federal Trade Commission for their for misleading quite a lot of people, charging 50,000 per training course. And you see, this is a temporary restraining order to stop all their activity sometime in February of this year, okay? So the question is how to find out if a company is SEC registered as ours. So you go to their legal, or general information, and they find this one, the ADV Part 2. So you can see I found that from company Betterment. What it means if you find the ADV Part 2, you can read everything, all the disclosures about this company, okay? So the first tip of the day is not to get into troubles, okay, with some wrong and misleading advice, okay? Now, so you could have noticed in the markets very strange behaviors, but it turns out that the market's now being traded by quite a lot of algorithms, right? And the people don't understand that. If they don't understand that, then I found kind of interesting article just lately, as you can see, June 16, 2020. 170,000 Robinhood millennials get stuck in Hertz stock spiral. What it means they are buying not with algorithms, they buying on their gut feel that if the Hertz is a prominent company, then sooner or later it's going to go up. So they buy in very deep deeps, and that way they got in trouble, right? So it is kind of interesting article that it dropped 97% for the past 4 months, okay? And then the question is that a good idea to buy Hertz? No, I don't think so. It's better to use algorithms which are going to be able to find you some better deals, okay? Don't buy on a gut feel. Okay, that's the second tip of the day. So now I'm going to be talking about trends, and then obviously there were some expectations about the bear trends, and I will show you where the expectation is coming from. Here, look at what's been happening in the past. This is internet bubble. There was a drop about 30%, then it was a pullback, and then all the way down, okay, more. Then this is a 2008, when there was a down and then pulled back, and here all the way down, okay? So there was about 10 years of growth, and that's where we are here. It's a little bit outdated slide as of March. As you can see, it's kind of went down, and now it's all the way I have to update that slide. It's almost catching up with the tops, but if history is any of our teachers, then people still expecting the test of these points, okay? So that means there is a still expectations, and people are naturally waiting for either the second wave of the virus and any excuses to go down. But some people say one of the reason why it's not coming down because the number of online traders in Robinhood or some other online brokerages been growing tremendously. Government gives the money, people have nothing to do, they've been trading, and that's the one of the reason why the market is kind of a little bit of a bubble, because there are no fundamentals whatsoever to stay as high it stays right now. Okay. So let's talk about our plan for today. I'm going to be talking some basics trading plan development. Then I will introduce our own concept of trading success, which is basically the backtesting. If you heard about backtesting, then you know what it is, and I will give you the difference between us and any other company. Okay. Then I will show you how to do the paper trades. Instead of trading real money, you can use our services and then test our own technology without using any money and getting trade, and then we'll give you enough of a feedback whether or not you're a good trader. So then we will find trends in news feeds and screener and trend prediction engine. And I will show you how to do that in the different markets, particularly in the current one, okay? So now, basic of a trading plan development. It's important for you to understand how we structure our technology. And here I split like a 4 types of plans. As a trend continued, so imagine like a stock goes up, 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 and then you right here and you believe it's going to continue up. It's a reasonable strategy. Quite a lot of people like buying in the dip, so stock goes up a little bit deep, and then you bet it's going to go up. This is a trading on the breakouts. Okay, so the stock goes up, and then only through particular price, as soon as it crosses, then it goes to the same direction. You don't buy it here, you buy it only when it crosses a line. Okay. Trend reversal, stock goes down, and then you bet on the fact it's going to go up. And it's all the kind of bullish strategies. This is the most dangerous one, and that's where all millennials getting stuck, because typically what happens if you do the right backtesting and calculate the odds of success, then if the stock goes down, it actually continues to go down more frequently than you really think. Okay. So this is a bear market type of strategies where you continue a trend, you buy on the deep up, right? Then when it breaks through the particular price, that's entry point, that's where you sell short, here you buy long, okay? And this is a trend reversal, and also both of these strategies are the most dangerous, but people kind of are stuck with the desire to find these particular points, believing you're going to get the most of the money, okay? And that's the, I would say, the most widespread mistake to find these points, okay? I will show you how we do that differently. Okay, now let's give a definition of the odds of success. What is the odds of success? You can read it here. Odds of success are the percentage of outcomes which confirm successful trade signals in the past. Okay, so what is a trade signal? Let's assume you wanna, with your plan, trade idea, trade in a dip. Okay, it's a kind of a pattern, up, down, up, right? So what backtesting is, you kind of go back and look for the similar cases and then see, okay, that was up, success, that's a failure, success, success, right? So 3 out of 4, 75% of odds of success, right? Um, and if you do this, then you kind of do your backtesting. And the difference between our approach and all the others, that if you use other software or websites, then you're pretty much forced to do the backtesting when you come up with a strategy. With any other indicators or any other combination of indicators, then you are forced to do that by yourself. Every time you come up with a strategy, then you do the backtesting, okay? The difference between us and any others, that all our strategy, we have thousands of different strategies and their combinations. We do backtesting overnight in advance. So that means when you use our technology, then you pretty much know in advance and you don't wait for any results of a backtesting. We call it odds of success, and we measure them in percentages, okay? So as you can see, that's the situation we most likely approach in the bear market, and where and how we trade. So we have a software which predicts with a different ways of certainty, that's a call odds of success, what's going to happen. So as you can see, when somebody, it's a half pipe, like a sport type of a summer, winter activity and winter sport. And then when the person goes down, 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 we don't consider to buy. And only when it's enough of inertia, we buy, okay? We buy and get out and then go down to the line to find something else, okay? The same thing here, so you're gonna go up, go down, and then all the way. And what our website provides is constantly find the opportunities like that, fly and get out, okay? It's our ability to make predictions. We have neural networks which being taught and retaught every day based on the market conditions, okay? One of the additional difference between us and other services is that we analyze not only individual stocks, but we pay a significant attention how the group behaves. Okay, so if we know how groups moves, then most likely, if you are inside of the group, then you're going to go as a group. So if the market goes down, we say, okay, don't buy. If the market goes up, then we say buy. And that's the important things for the entire market. But some of the industries or groups can go down even the market goes up. If the market goes down, the sum of the groups might go up. So what is important in trading is to find the groups all together and then find the opportunities to jump in one of them, okay? So this is the basics, and let me show you and how we do it, and then let me show you our basic stuffs on the website as an introduction, okay? So if you see here, load latest signals, as you can see, we provide quite a lot of signals. All of them have hashtags, and you can sort by the hashtags this entire feed. There are quite a lot of news we generate. Load latest, we load latest, and 6:10, now 6:14 on the West Coast, where we are in the Silicon Valley. Okay, that's the first thing you see. Netflix, MACD. You don't know anything about MACD, you click here, And then there is a short article explaining what is the MACD is. Always look at the, some kind of explanations. That's the one thing. The second thing on the first page you can find is overview global sectors. As you can see, we immediately say that even though Dow Jones went down, the technology today went up. Nasdaq almost zero, S&P 500 almost zero, but technology keep going up, and energy went up based on the analysis of these ETFs. Okay, materials, industrials went down. Okay, let's look at the international markets. We see that Latin America went down and Asia slightly up. Okay, that's the results of today's trading day. Okay, so is the first thing in the morning. What I do is I'm checking what happens with this particular ETFs. We have this DIA is representing Dow Jones, SPY representing S&P, QQQ Nasdaq, IWM it is Russell 2000. Okay. So one way to see what's going on with the market, what I do, I click here, view more. Okay, now I have quite a lot of stuff going on here, different like commodities, bonds, currencies, type of ETFs. And then what I can do is to say, okay, by gains, what is the best, what is the worst? As you can see, bonds, commodities, bonds kind of go up, right? And then here it's some of the currencies and there's stuff going down. Okay. So then what I do is I click here. Now I'll, what it means I pick up all four in this tile, okay, which is major indexes ETFs. And then now I introduce you quite a thing which allows us to copy and move to all kinds of parts of our system, okay? So if you look for this blue field, you always can move it. First, you can create, let's say, watch list. You can move it to portfolios. If you click in here, as you can see, you can move to screener, scanner, analyze, quite a lot of things, okay? Move and find trend predictions and see what's going on. I will talk about that later, okay? But what I want to do is to find out what is the AI thinking about the overall health of these four major indices, okay? I click here on the scorecard, and now I get to this. This is a four ETFs, okay? And you see overall situation with the group scorecard is buy, okay? So that means kind of overall tendency is going to be up. As you can see, if you read our analysis, then it's still going to go up a little bit, but as you can see, every time it turns around, it goes down. And this is a mostly analysis of how much people buy or sell and who is prevailing. As you can see, the ratio is 1.8 to 1. So it's almost 2 to 1. You have buyers than sellers. And if it is the case, then definitely market is going to go up. But let's look in more details. It turns out that DIA, okay, is a kind of been going up, and lately I've seen it was a really buy somewhere here, but overall it is analyzed as a hold, okay. Now SPY also hold, okay, even though there are some really positive developments for the future, but the system which is analyzing all these stocks kind of says, let's take a pause, don't do anything at this moment. You see QQQ, which is the Nasdaq strong buy, and we saw Nasdaq is still moving up, right? And it's a good thing. But IWM, which is the Russell 2000, it's a small cap, typically 2,000 stocks, it's already sell, right? So it means yeah, it's a really good chance. People were expecting to test this bottom here, but it didn't go. There's still expectation of a second wave. That means there would be expectation to still go down and test this point here on the Nasdaq. And is that possible that Nasdaq can depart? Everything is possible in this market, right? With the participation of and people on online doing nothing. Okay, I think what's going to happen when the people are going to go back to work would be much fewer buyers, and then people are going to see the real stuff. The people are going to see the fundamentals. I mean, not only the retail investors, but the institutions. Then there might be internet bubble or the real estate bubble burst. Okay, I don't know how they're gonna call this bubble. Most likely also COVID or like lockdown bubble is gonna go burst and gonna test this point. That's almost for certain. Okay. Um, so that's a first thing I do when I look, and then I go back and then start thinking about what's going on with the market. Okay, the one way is to see, and particularly if you have a obviously cell phone, you can scroll and see the style, and then you will see what's going on overall with the news we generate, right? As you can see, Amazon, right? Oh, okay, it is the signal buy, okay? And as you can see, if you're not logged in, you ask to log in. If you want to make a paper trade, you have to log in. So let's do login. I'm going to log in now. Okay. Okay. So what you can do to test our technology and your own gut feel, if you want, with some hints. Okay, let's try to see what kind of a news we generate. As you can see that it is the bullish trend is identified, the probability of going up at 89%, okay? Then I say, okay, it sounds good, and I'm gonna make a paper trade. So Amazon, buy, and then what's gonna happen, market is closed, and then I will show you what is a paper trade according to our plan. As you can see, this is my paper trade. So as you can see, I've been trading just these paper trades for a month, from May to May 18th to June 18th to today. And that's a really interesting analysis, okay? If I continue to trade the same way, then annualized profit and losses, I can make 300% if I do the same way if I'm doing now. Average, I'm making $800 per trade. As you can see, I have a closed within this month 37 trades. Average duration is 8 days. Okay, average profit is 1,000, and average loss is about 800, which is a good ratio. Okay, so then I continue to analyze. As you can see, I made 37 total trades, and then long positions 33. And 87 I was right, and like 13-12% I was wrong. I made short 4 position, I was always right, which is amazing, right? And then here are some open trades, and this is one pending order. Okay, so the pending order is Amazon. It's going to buy at open. When market is going to open, it's going to buy. What it's going to buy? It's going to buy 10,000 worth of the Amazon stock. So what we do, take 10,000 is a nominal trading opportunity, and then divide by current price. Then we have a number of shares, and it's going to give me a trade. Okay. So I have these open trades. As you can see, what it's gonna give you interesting stuff. First of all, as you see, I've been trading that from the news, kind of also during demonstrations. I kind of left with some losses. And then news from scanner. This is from the robot we've been developing. Okay. And yeah, it's okay. I have some losses, and that's normal to have some losses, but I do have over the month 26,000 of gains. So if we look over the quarter, let's see what I've done. Okay, 56, okay, which is, again, it's the same number of open positions, 60,000 of closed positions. Obviously, it was too good of a month. Now it's 95% if I continue to trade the same style. Now these things are somewhat equal. It's good because my guessing rate is 77%. 223 out of 270 I did right, and about 47 up 53% I was right on the short positions. Okay, so let me also show you how you can analyze your trades. First of all, as you can see, these are the trade ideas where it's coming from. Let's say it's IPF, which is the intraday pattern feed. Our premium product, this is a premium product. News, some mine ideas, and these are from robots we've been developing. I will show you. Okay, so what you can do is the following. First of all, you can look and then sort by the trade ideas and see where your good ideas, you see, was good from a scanner. Okay, I did well. I did well from the premium products. I did well from news. Okay, so another way of analyzing yourself is clicking here on tickers. Okay, so when you click on tickets, you're gonna find out, you see, where you did well. You see, I did well 11,000 on this company. FTR, you can click here always on a blue Frontier Communications. I did really well. Then let's see, I did trades on this company, Diamond Offshore Drilling, did well, almost 4,000. You see, all green, and that's where you're not gonna find anywhere else that with us where we give you analysis of ideas and what's going on with your luck, if you wish. And then obviously what you can do, find out like where you lost the most. Okay, and then you click here, and then you see, okay, I lost quite a lot of on this company, and most likely Darren Restaurants, I was wrong, but that's okay. I will not be able, I will not trade DRA again because I got unlucky. And the important thing is for the trading is to not to marry to your own losses. Okay, when you have them, just get out. Okay, maybe in the future, what we're gonna do with these paper trades, the next time if I'm gonna decide to trade this one, then the software is gonna tell me, oh, okay, Sergey, don't trade that one. You were not lucky. I say, okay, cool. So that's a feature we can do. Okay. So this is a brief introduction, and then important thing is that we've been here's a kind of the homework we've been doing. We're developing quite a few robots where robots taking our tools and then start trading. Okay, trading exactly how I'm trading, and then you see how many different robots we've been developing. As soon as we are happy with the testing, then we're gonna present them to you, and then you will be able to follow them. Okay, so this one is the one is a potential candidate. Most likely we're going to release them sometime early in July. Okay, so as you can see, within a month it's been trading 83,000. Important characteristics are This is a Sharpe ratio. I didn't look at mine. If it continues to trade, it's 259% average. As you can see, average profit is better than average loss. It's a 2 to 1 is excellent. And then that's where when you're going to be approaching these robots, then you're going to be able to look what they do. Okay, so these were the trades as of today. It was win. This Tupperware brands. Yes, entry points are not always perfect, but then it doesn't matter. What matters overall result. Okay, so we're going to be optimizing in such a way that you're going to be able to see opportunities as of today, and then when we test them, you're going to be able to access this additional technology. Okay, so let me go back and then start thinking. Okay, do it like that. Reload. Yeah, I'm logged in. So as you can see, I'm kind of following my plan and talking about, I was talking about paper trades. Now, trends in news feed, okay? So let's talk about that. So this is a news feed, and then we already talk about that one. And as you can see, Boeing was quite a good gainer over the past 3 months. So what we do, we kind of analyze when Boeing was a gainer for 3 months, whether or not it's going to continue to go up. Our AI analyzes, and then the 77% chances is going to go up, right? So what we found, as you can see here, if you read, 271 similar cases, and 210 of them went up. That's how we come up with. So now, Amazon, okay, Netflix, good opportunities, and how you can use that. Let's assume you kind of scroll on your cell phone and then see internet retailer, okay, and then you click here search, and now you're gonna look through all the news for the internet retail companies. And as you can see, the title, Trade Signals Outlook Analysis of Tickers with Internet Retail Industry, okay? Then what we do, we take all these 24 tickers and analyze them as a group. That's what nobody really does, okay? So let me see, somebody posted the question. Okay. Firstly, thank you. Okay. Somebody is testing, saying thank you guys. Okay, so look, so how to read the news now about the internet retail industry? Okay, so as you can see, it's a title internet. It's a 24 tickers here. First of all, you can move all of them to any other module you want, okay? Now, this is a group analysis I was talking about when I was showing you the hertz, right, of ships. Number of people buying 1.33 to 1, okay, as you can see, advances versus declining issues. And then, as you can see, some go up, some go down, and there are different situation. This is about the signals, okay? As you can see, attack for internet retail is taken, okay? So what I can do is to move it to and see all their scorecards. Scorecards is a summary of their buy and hold opportunities, okay? And as I said, that in the bear market, it's important to see where the group is going. As you can see here, the group scorecard is buy, okay? What it means, so we can open, and then we see inside of the group, we have 15 strong buys, one is buy, and then sells, and a couple of holds, okay? and the same analysis. And now we can go and see what is a strong buy, what is a strong sell for each Amazon. Strong buy, even is kind of keep going. The AI says it's strong buy. As you can see, we're expecting a bear market, and we kind of got out of the bear market. What is important is to find really strong groups like here. Okay, what guys, it's important to find those groups, and I'm showing you how to find it. Okay, so where's that group? So if you see this one, this is a group. Okay, if you can find that group moving up, you can buy it in the bear market, but be careful when the entire market is dropping, and it's not the case. Okay. Okay. Yeah, ask whether or not our AI taking into account some earnings reports. Yes. Okay. Job reports, no, and Fed stocks, no. Okay. So we do not take that into account. What we do take into account, I will show you when we get to the screener. Okay. And how I'm going to do that, let me show you how I'm going to do that. So as you can see, you can read about every stock, and our forte is to give you short-term guidance and not to get to the situation like with Hertz. Okay. Now, what you can do is to move this group to the screener. Okay. I'm moving all 24 stocks to screener. So we can read about them, but also can see the entire group in the screener. And as you can see, the same scorecard is here, this tab. But what is important, it shows where AI takes its guidance from fundamental analysis, where we have quite a lot of analysis based on fundamentals. Then we take technical analysis into account. We're teaching neural networks based on the different parameters, including classical known indicators like stochastic, RSI, RUN. We also take into account classical fundamentals like P ratio and all this list. And the good thing about this screener is that you can view the tickers as here, and also can click here, earnings calendar, click here, boom, and then you know out of that list, you have immediately earnings calendar for the list you prepared. Okay. And what you can do is you can do the following. Okay. I'm gonna go back, and then as you can see, I can get and then sort by strong buys. Okay. So as you can see, quite a few here strong buys. What I can do is to take almost all of them. All of them. I don't need all of them. I'm gonna unclick those which are not strong cells. Okay, my mouse is behaving poorly. This is a second. I'll go to that one. Okay, so I'm removing these ones. Okay. Should I press the wrong button? Okay. So now, so I have how many? I have 18. Okay. So what I can do, I can create a watch list. Okay. And then I'm gonna use that watch list tomorrow. And that list, I'm gonna say, okay, add new, okay? And I type here, today is 06, 18, 20, retail, right? Enter. Okay, so now I have this watch list is in my memory. And as you can see, I can get that watch list pretty much from anywhere. Let's see, I'm here on the first page. I collected all strong buys, and my herd is intact. And I'm prepared if the market is going to move up, I have a list to trade up. So what I'm going to do tomorrow morning, I'm going to come here to my watch list, okay, and then find a 618 retail, and I open that. So this is my screener, okay. As you can see, it's really good when well up, moving up stocks, okay. And then I can analyze again here. Okay, so what I can do, I open that watch list tomorrow if the market goes up. So that means overall market must go up. Even on one day, I click here, I select 18-hour waiting, and then I move it to the scanner to see what I'm going to do tomorrow, okay? So the main feature of a scanner is that it generates P&L from the moment you click on the scanner. Let's say you click at 30 minutes from opening bell, it's going to start calculating P&L and giving you the charts from exactly that point. Okay, you can do it from here. You can move it from that point. Sorry, from that point you can move it and find. First of all, you find a lot of other stuff, including you can trade all of them. You can say, okay, I believe that I'm gonna do all of them 18. I'm gonna buy it tomorrow. So if the market would go up, I would buy all of them and then test this technology. Okay. Oops, sorry. Okay. So then I can move to any other premium tool. So for instance, I can check with specifically trend predictions what's going to happen with that list tomorrow. Okay, so you see this the same list, and see from AI perspective, these are the odds of stuff moving up. Okay, this list looks good and good to go tomorrow if the market at least not dropping like a rock down. Okay, so the same way you can do if you want to get the list to be prepared for the day when the market goes down. Okay, so what you can do the following. Okay, now I'm showing you a little bit of a screener. Actually, in a week, I'm going to talk about more about the screener, but that's a kind of first glance. We cover about almost 4,000 stocks, and we do all the pre-calculations. Okay, so as you can see, it's sorted by strong buys. Okay, and what I can do is as follows. Here are the our opportunities to filter. Okay, so for instance, I will say, okay, if I want to kind of see there is outlook rating, which is looking at the volume. I'm going to so what I want. Okay, I want to prepare. Oh, I'm sorry. I told you I'm going to prepare the list of strong sales. I click here. You see, now I have opportunities to sell. Okay, you see, Las Vegas and all these companies is Nordstrom, doesn't look good. As you can see, this is all strong sales. Okay, so what I'm gonna do, not thinking too much, I'm gonna prepare one more list. I click here 20 out of without really using any other features. because I don't have a lot of time. And I'm going to create one more watch list. So I'm going to go and add more. It's going to be 06, 18, 20, bearish, enter. And then what's going to happen if I'm going to do it, it's a scanner. Um, let me go here, home. I can do it from here. So now it's my watch list. Okay, now 06, 18, 20 bearish. Okay, and this is my list of strong sells for tomorrow. And then and what I'm gonna do tomorrow again, I'm gonna wait, and then market is open. I click, put to the scanner, okay, and then I'm gonna observe what's happening. And if every confirmation is exactly how it is designed, then from purposes of paper trades, I'm most likely gonna test all of them. I will sell them short. I click it here tomorrow, and then see what's going on. And that's how actually I'm making my paper trades, just exactly how I'm showing one of the strategies. So I will sell short all of them tomorrow. Here's actually earning dates and news. You can see and click here. You can read about every company pretty quickly from other sources, not only from us, but even from us, you have some news. And that way you're going to be prepared for tomorrow. So bear markets, they're always volatile markets. And the idea is to be prepared for the one day what's going to happen tomorrow. Who knows what's going to happen with China, with the second wave. Be careful. Look at the list, see what the confirmation is. If the market goes down, use this list. If the market goes up, use another list. And that would be the wise approach. Okay. So let me look at the questions. And I'm pretty much done for today. Also, what kind of risk reward ratio AIs follow? Risk reward. You know, sometimes we don't know really what happens with teaching our AI. We have different approaches, and the outcomes are also different. So in order to look at the risk reward, we developed our own fundamental ratings. So instead of looking at the classical one, P, PB, and so on, EPS, we develop our own, okay, which takes into account risk reward. So this is a rating of risk reward, profit versus risk rating, okay? And if I look, then you see in where I am, yeah, I'm an entire list, okay? So as you can see, if I click here, then I sorted the entire universe and found the best model, profit versus risk, okay? And that's a standalone rating. And this rating is also taken into account for the purposes of looking at the scorecard, right? And as you can see, even though from fundamental analysis perspective, long-term perspective, what we see, Dollar General, what we see on the scorecard, it hold, okay? But Domino Pizza, the profit versus risk is one, but it is a strong buy. Why Domino Pizza? Because I think a lot of people buying pizza online, okay? And that's what's going on, okay? So guys, we have about 9 minutes left. What's gonna happen with Zoom, they're gonna really close down the way we schedule that at exactly 7 p.m. Pacific, okay? I'm gonna read the questions, guys. Overbought and oversold question, yeah. With regard to overbought, oversold concept, I've been trading quite a long time, and I can tell you, if it is overbought, then it is no guarantee that's going to go down. Okay, so let me show you how we use it in our news. Okay, so let me go here. And I will show you the stuff which are gonna help you, okay? So what I'm gonna do, I'm gonna go here. I'm gonna take hashtag technical analysis, okay? So I'm taking all the news, technical analysis, okay? And I also take stochastic, for instance, okay? So now I have the stochastic. Why? Because these are now all news which are stochastic, and they are here, right? So it just for the purposes of looking at the chart, as you know, if you guys don't know how to use that, always gotta read here about stochastic or RSI. There are always two zones. This is overbought zone. This is a oversold zone. And then what happens in these territories that it's been proven again and again that as long as it is in overbought, it can or oversold below these lines, then anything happen. It can continue go down, or it can start reversing. So from that perspective, for me and for our software, these zones are unknown zones. We don't bet anything when the stock is in this zone. Okay, what we're looking to only on this interval between this point and this. Look, it's from exactly that point and that point. Okay, that's where we are looking when we use stochastic, and then from that perspective, this is the only zone where we trade, right? So when when it stays above this line, we say we don't know, we don't understand. Okay, so overbought, it could continue go up. As you can see here, it is in this zone. Look, right here, it got to the overbought zone here and continue to go up. It could go down, but it can stay there, and nothing you can do to make a conclusion. Okay, so don't overestimate concept overbought or oversold, but look at the jump. Okay, don't try to find like when the people trying to find something, they're always trying to find this one. Don't try it. Okay, try to find this one. Okay, when it is obvious, wait for that. But then you're going to say, oh, how long I have to wait? But that's the whole point of jumping from one stock to another and finding only these opportunities. Without the algorithmic trading, without the algorithms, you're always going to be stuck with unknown territories, and that's the problem. Okay, so here are more questions. I have 5 minutes. Okay, thank you. Do you recommend using stops? Yes. Yeah, it's important to use stops, particularly in the bear markets, and you have to get out. I can tell you that when I started trading, I don't know, 20 years ago, I don't know how old you are, guys, but when I started trading 20 years ago, to buy stock, you have to pay $29. To sell, you have to pay $29. So the round trip costed me $60. And that was quite a big deal. Okay, it was the first online trading prices. Now it costs nothing. So when you feel you missing an opportunity, it's better to get out with a small loss and not be stuck with this one. Okay. There is another article which I can find you kind of scary, but if you want, I can quickly find that for you. So it is actually sign up for our Facebook, on our Facebook feed, where we really have quite a lot of interesting publications, some of ours, some of not. But as you can see, when the person been trying to find some good opportunities, he lost 730,000 and committed suicide. Okay, don't do that. Don't marry your losses. Get out. Don't be embarrassed with the losses. It's better to lose very little than a lot. Don't get stuck with hurts, and do the right thing. Yeah, stops are very important, but that's another topic. Okay. Let me see other questions. Use ultimate price. Yes, yes, absolutely true. So you have to get out. It's better to recognize a mistake, get out. As you see, I showed you my paper trades. I'm not shy to lose. It's okay to lose when it is little, but then my paper trades prove that I'm not losing quite a lot, right? But as you can see, let me check it. Yeah, my paper trades. As you can see, I do have losses. Big deal. I get out. Sometimes I just don't have enough time to get out. But it's not bad to get out with some losses, but then again, so much better. Okay, but I can tell you one of the characteristics. If you use paper trades, okay, then you're gonna collect your trades here. And if you see that $100 average gain and $1,000 average loss, that's definitely the wrong ratio. Okay, so that means you marrying your losses, you are afraid your losses, you do not recognize your mistake, you're hiding from your mistakes. Okay, and that's very dangerous in the bear market. Okay, okay, one more questions, and be prepared. That might be Zoom just shut it down. Okay. Are there going to be future plans for signal integration trading platforms like? Yes, yeah. So we do have these plans, okay? I'll show you the following plan. We're going to release this robot sometime in July. If everything is fine, then what you're going to be able to see is our robot trading like me, okay? It's going to be real trades. Then we're going to be continue to test them, and then the next stage is we're going to connect these robots to real accounts. Okay, that's is going to start happening sometime in the fall. Please follow this website, our newsletters, and then we're going to be informing as soon as we have this opportunity. And by the way, we can do it, and I can tell you why. Because we are a SEC registered company. There's not other companies can do that, but only because we're SEC registered, we're going to be able to manage other people's money. Okay, so that means we're going to put that online, and then you're going to sign up for the robot. We're going to connect it to the account, and they're going to monitor how the robot is doing that. Okay, one more question, and be prepared, it might be shut down. Somebody just clicked, but there was no message. Greg, I don't see the message here. Okay, so guys, I really like your question. It's a really good team here. If you have any other questions,